We start, though, with stocks staging their longest losing streak of the year. The Dow falling for the third day in a row, but closing well off session highs, managing to eke out gains for the week. But take a look at a potential canary in the gold mine. Get it?
Got it.
Gold is surging even as stocks climb back from their December lows. Worries over global growth have sent investors digging for safety. So is a yellow metal flashing a red light for the market? Just how worried should you be?
What are we listening to?
Kanye.
What is Guy doing?
I hope
when
not.
they bring the bell, it means yes. And I actually learned recently that Ye is a huge Fast Money fan. So I appreciate you watching.
Sorry about the laugh.
No, it's 100% true.
All right.
The whole Kardashian West family
I'm sure.
watches it.
Especially when we talk
and
about
I will
bling.
tell you, now, Tim is going to come back and be hard. So I'm just letting you know that now. But I am here to tell you, and BK will agree, a couple weeks ago we talked about that. Look in the move in GDX since basically, I don't know, early September. It's gone from 17.5 to 23. Biggest move we've seen in that index in quite some time, bumping against levels we saw in July. And I'll give you a little anecdotal story. Not that I like to do this, but I will. Recently, you see what's going on with Venezuela? Well, guess what Venezuela did, BK? They asked for their gold back. They said, hey, they got on the blower and said, hey, Bank of England, we want $1.2 billion worth of our gold back. You know what they said? No, doesn't work that way. I am telling you now that central banks are buying gold in ways they haven't done it in decades. Gold, in my opinion, going higher.
Well, we know that Russia's buying gold. We've seen that just in the stats out there. But the other thing with gold, I'm not 100% sure that it's a warning sign, but think about the probable outcomes we have here for the economy. We have some kind of a China trade deal, and the global economy turns around. What happens then? The U.S. is at full employment. The potential for higher inflation is there. What happens if none of that happens and Europe continues to crater, China continues to crater, and the U.S. economy catches a cold? Well, then the Federal Reserve even today said, hey, maybe we're thinking about doing some quantitative easing again when it's not even an emergency. So I think that's what gold is telling you. Now, it doesn't mean that you have to have runaway inflation, but it does mean that a lot of players in the marketplace are predicting inflation, especially when the dollar isn't down. That's the interesting thing. Gold's up 12% since August when the Fed kind of floated this inflation targeting thing, and the dollar is flat. So this is a pure demand for gold story.
So I don't think that the moving gold is a sign of inflation. In fact, if anything, I think it'd be very hard to argue right now that we don't have a ton of deflation. I mean, look at yields around the world. Look at the credit bubble that effectively burst, and we haven't taken that cancer out, and it's still wiping us out. So what gold is doing is it is possibly a store of value at a time when people are looking for other things and diversification. We know the market has been looking for that. I would just say be very careful on gold at $13.50 or at $23 on the GDX, because gold's been a widowmaker right here. Look at 2016. A lot of heroes in the gold space until they weren't. They got destroyed right at these levels. And gold has done basically nothing in the last 2.5 years, if you ask me.
Just because it hasn't done anything doesn't mean that this isn't the time that it starts doing something. The other part is you might not even believe it's a store of value, right? There hasn't been a lot of investment in gold mines. So you have a potentially, not a shortage, but certainly you don't have that investment that you used to have. So there might not be as much supply as there used to be. So there are multiple reasons here for this gold rally.
So I think Mel started out the conversation, is it a canary in the gold mine for the broader market?
Thanks for
exactly. What does it mean for the broader
I just think you
markets?
guys kind of went off the rails a little bit. The Kane West thing was kind of weird. I don't even know what you were doing. But I'll just say this. The smartest thing I heard in that whole little segment was you're talking about deflation. And I look at the 10-year...
that's what I said.
Yeah, you did. And I look at the 10-year Treasury yield at 2.63%, down from 3.25%, just a few months ago. And I say to myself, that is not good for risk assets globally. I just don't see it that way.
And what do you think the central banks are going to do?
Well, listen, I don't know. If
I do.
If they did an about face, BK, if they did an about face, if our Fed did an about face, okay, from tightening to the potential, the credibility is gone, and at this late stage in the cycle, I just think that the next move could be to an ease, and I just don't think that's going to be good for risk assets.
I don't
think that's going to be good for the stock
market. It depends on how much inflation there is, right? If there is a sustained amount of inflation out there, let's call it 2 to 3%, or even if the Fed targets 4%, they've said they want to actually have a little higher inflation. They would tolerate that.
We've had 3% inflation. It hasn't happened in decades.
Exactly.
So it's not going to happen.
Really, it's not going to happen.
When they took rates to zero, when the heck is it going to happen?
Why wouldn't it happen now? We didn't have full employment at that point in time. We had to go from 10 to 11% employment down to here.
All right, listen. I mean, gold guys are just, okay. I don't get it. It's one risk asset, and it's tiny, and it's really not telling us anything about anything. The fact that
of course it's telling us. It doesn't have to tell us anything about the stock market, but it can certainly tell us whether or not
there's a ball and buy. What do you say? Have a 2% gold allocation in your portfolio.
Why not have more? Why does it have to be 2%?
The anger on a Friday.
Seriously, go back to your semis.
So
see how you like that.
You guys, I mean, could it be as simple as we're seeing a bid for gold because people want to diversify away from risk assets because they're concerned about what's going on with global growth and the markets at this point? I mean, does it have to telegraph something about inflation or deflation on the 10-year? I mean, does that have to be present in this gold rally?
I would just point to the last time we had gold make this kind of a move, and it was in the first and second quarters of 2016 when we were going through the same kind of question about global growth. So that is why gold is rallying. Gold is rallying because, first of all, the dollar is in a holding pattern. Rates are falling, and that's an environment where people do want to hold on to a store of value, I repeat, because if gold is anything, I do believe it's that. And whether that's something to invest in, I think, Dan, that's your criticism, is why even bother with it. But that's an allocation question. Why is gold rallying? We are questioning global growth. That was front and center this week.
Yes, and I also think it's a central bank credibility thing. You know, again, when the U.S. now about faces in the course of a 6-week period when the stock market went down 10 to 15%, I think that's telling people, wait a second, central banks going to get accommodative again. Maybe it is time to be there. Maybe the currencies globally are going to continue to get torched. Maybe there is a rush to zero in terms of sovereign nation currencies, and maybe gold is the place to be. I will tell you, and BK can back this up, central banks without question are buying gold, and there's clearly something going on because it's rallying at a point in time where historically it really shouldn't.
I would just say don't ignore what's going on in the gold market. Whether you want to have a 2% allocation or a much higher allocation, there's no hard and fast rule how much of this you have to buy, but gold is going up at this point in time, so you have to know about it.
And so is silver. And to be clear, also in the worst of the markets drawdown, copper also actually really held its ground, which is, Dr. Copper is in some cases supposed to be a sign of the economy. But Brian also talked about the lack of investment in mining and mining businesses over the last 10 years. And copper is probably the one place where I think you have supply demand possible.
When did the rally in gold start?
August 15th.
August, right?
Look at you. That's BK.
And you know what happened
that day?
What happened that day is the Federal Reserve was about to have the Jackson Hole meeting, and Jerome Powell delivered a speech about inflation targeting and potentially tolerating inflation above 2%. And in June, they're going to have another report on that. They're doing a study on it now. They announced it in November when gold rallied again.
I just think it's Friday, so let's recap what are the most important themes, and I think we're hitting it, which is that central banks this week around the world, that includes Fed's Kaplan basically speaking for the Fed as far as I'm concerned and saying we'll take a lot more heat on inflation. Yeah, the Reserve Bank of Australia go 180 degrees and go from a hiking mode to a cut. And essentially all on China. You have the ECB questioning exactly what they're going to do, and you had rates that went extremely negative around the world, especially in Japan, and that's the story of the week.
Nice, Tim tying it up.
Nice button.